Okay, we are live on Facebook. It's Joanne Musa, the Tax Lien Lady, and this is Tax Lien Investing Tips. So your tip for today is about evaluating tax sale properties. Okay, so, and I think we've talked about this last week, but we're going to talk about it again because it's so important. So as you come on, let me know what state you're from, and so that I can kind of tailor this to the people that are actually coming live. So as you come on, just say hello, let me know who's here and what state you're from. Okay, so today we're talking about evaluating tax sale properties, and let me get my marker here so I can down. Most people think this starts with looking at the properties in the sale, right? Wrong. It starts with getting the results of past tax sales. Results from past tax sales. That's the first thing that you want to do, okay? Why? Why do you want the results of past tax sales? Well, because then you'll know how much money you'll need, and you'll know if it's even worth it to go to that sale, depending on whether it's a lien or a deed sale. If it's a deed sale or a redeemable deed sale or a lien sale where people bid premium for the liens, you're going to know how much people are paying and whether it's worth it or not to go. Okay, and you'll know how much money you need. And you'll know, and here's the other thing, you'll know what types of properties are better to bid on, which ones are more competitive. And I will tell you that the houses, the residential properties are going to be more competitive than other types of properties. So look and see what types of properties are not as competitive as the others. Those are the ones that you want to concentrate on. So then the next thing that you want to do is, and we're not even looking at the properties yet, right? You want to filter the list. And you're going to filter the list by the type of properties that are not as competitive, and by places. It might be like certain places are less competitive. When I say certain places, I mean, sometimes these are big county sales. In most states, they're big county sales, like not in New England, not in New Jersey either, but in other states, they're big county sales. And there might be a few thousand, a few hundred, or a few thousand properties in the tax sale. You need to narrow that down, right? And you need to narrow it down. You're going to filter the list by the types of properties that you found out when you looked at the results of past tax sales that are less likely to be so competitively bid, right? And also maybe in places that are less likely to be competitively bid. And in places that, and this is something I teach my coaching clients and that I will be teaching in a masterclass that I'm doing next Thursday, is how do you find out the best places to invest in a county if you don't know that county? If you're investing from a distance, you don't know the area. I actually show my clients how to do that. I also show them how to get results from past tax sales and how to filter the list. Okay, and I give them the tools to do that. All right, and I will be showing that in the masterclass that I'm doing next Thursday, which I'll tell you guys how you can register for that masterclass. All right, so you want to get the results of the past tax sales. You want to filter the list, and then the next thing you're going to do is do your due diligence on those properties in the list. But first, you're gonna quickly figure out which properties you want to bid on, or which properties you want to do more due diligence on, because then you're going to actually look at the property on a map. You want to. And I'm not sure how to put this down here, because when I look at the property on a map, I use tax sale finders, and it lets me see the Google map, but it actually puts a boundary around the property, around the parcel. so that I know I could tell right away when I look at that property if there's a building on it or not, if it's just the yard next door, right, and not the house. So you want to look at the map. Okay, then you want to look at the map, and you want to look at the assessed value of the property, assessed value, the market value, and you're going to determine your LTV, loan to value ratio. Now, okay, so this is the fifth thing that you're going to do. Now I'm going to go over these. We only have 20 minutes this morning, right? So I'm just going off this checklist. Hey, Ray, how you doing? But on Thursday night, when I do the master class, I will actually go through these steps for you, okay? I'll show them to you, all right? And I'll tell you how to get into the master class when we're done. Oh, hey, Ray, you still can't see the properties on tax sale finders. Do me a favor, can you send me an email? And don't send it to me, send it to Nicole at support@taxlienlady.com. And Nicole will be able to handle that for you. And actually, I can even give you a call later today and go over that with you, but because I think that's what we need to do, is have a phone call about that. All right. So I can, I have another meeting after this, but I could call you later this morning. Okay. Yeah. Ray is a coaching client, guys. All right. So far we've gone, you get the results of past tax sales, you filter the list, you're going to look at the properties on the map, and you're going to do this quickly. I have a program that I use called Tax Sale Finders, where I just look at these properties quickly, and that's what Ray was talking about. He's not able to do that, so I'm going to help him be able to do that today. But what this lets you do is, my coaching clients get 50 property reports a month, so they're able to look at 50 properties. They look at the map, the assessed value, the market value, and what's important is the LTV, because that's how you figure out how much to bid. You want to keep it a certain percentage of the value of the property. LTV is loan to value. And when we say loan to value, we mean the bid amount, the amount that you're putting into the property has to be a certain percentage, has to be under a certain percentage of what the property's really worth, okay? And you get to determine that. You get to determine whether that's 10% or 20%, and I wouldn't go higher than that, all right? But it's not just what you're bidding, it's all the other money that you're going to have to come up with. So if you're going to a deed sale and you're buying a deed, there might be other fees, like a realty transfer fee that you're going to have to pay in addition to the bid amount. Sometimes there is an auctioneer fee that you have to pay in addition to the bid amount. So you have to take all that into consideration. What about rehabbing the property? You have to take that into consideration. What are you going to have to do for that? And anything like that. Now, for a lien situation or a redeemable deed, you have to take into account what you're going to have to pay during the redemption period. Are you going to pay subsequent taxes? And if you do get the property, what are the foreclosure costs? So you have to add all that in for your loan to value and figure out your loan to value. All right. So then what you do is, the other thing that you want to keep track of is the environmental. Are there any environmental concerns? Okay, and so what you want to make sure is that there's not an environmental problem on the property that you're bidding on. And let me move this so you could see the bottom of that list there. All right, so any environmental concerns, and is it a flood risk? Now, these are all things that we can see on these property reports. The other thing that you want, if you can get it, you don't always have this, but if you can get it, it's good, is the mortgage information. Is there a mortgage on the property? Now, this is really for liens, because some people, if there's a mortgage on the property, they don't want that lien because they want to be able to foreclose on the property, which, by the way, if that's what you want, liens are not the way to go. All right, it's better to do deeds if you want the property. But for liens, people that are doing lien investing and they want the return on their money, they want to see a mortgage on the property because they know they're going to get paid, right? And they know, and the thing about if there's a mortgage on the property, it might take a while before they get paid, which means they're going to make more money. Because with companies like that, there's a lot of red tape. They might not even know that there's been a lien sold on the property until you do the foreclosure. And then they're going to find out and they're going to pay it off. Okay. So that's a good thing if you're doing liens. And in most states, for deeds, this is going to go, the mortgage is going to go away. However, in some states it doesn't. And those are states that probably are not worth bidding in. All right. And there's only a couple of deed states that do that. I will tell you, here in Pennsylvania, they have two different sales. If you buy in the upset sale, you are responsible for the mortgage. So you do want to see if there's a mortgage on there and how much it is. You are responsible for it if you buy it in the upset sale. Then if it doesn't sell in the upset sale, and the upset sales are happening now in the fall, if it doesn't sell in the upset sale, it goes into the judicial sale, usually a few months later in the spring. And what happens between the upset sale and the judicial sale is all the lien holders are notified and the owner is notified, hey, your property is going to go into the judicial sale. You can come now and pay the taxes or you're out of luck. Okay. And so if you buy in the judicial sale, you are not responsible for any mortgages or liens unless they're government liens. Okay, you are responsible for government liens. All right, so that is a rundown of what to look for, but there's more for deeds. Okay, that's the start of your due diligence. That's the start of your due diligence. You're researching tax sale properties so that you bid on the right ones. Hey, James, how you doing? What is the percentage of redeemable deeds that get redeemed? You know what? I don't know that. I know you probably have a little bit more of a chance of getting the property, but still not. I will tell you that I took a client to South Carolina before COVID, and he got 3 properties in a redeemable deed sale. They all redeemed. So most of them are also going to redeem. Is it as high as with liens? Because with liens across the country, 99% redeem, especially in the better areas, they're going to redeem. So with redeemable deeds, I think it depends on the area. And I know investors that invest in Georgia, and a lot of those do get redeemed. Okay. All right. So I hope that answered your question. And you guys that have questions for me, come on Tuesday at 2 p.m. when I do Ask the Tax Lien Lady Live, because that's all about me answering your questions. This is really about me giving a short training. Okay, on 9:30 in the morning on Monday, Wednesday, and Thursday, I give these tax lien investing tips. So this is just a tip about how to evaluate tax sale properties. Now, what we've done so far is what I do for liens, and then there's a little more that you need to do for deeds. So when I would look at these properties in tax sale finders. I look at the map, the assessed value, the market value, environmental concerns, risk, and mortgage data. And then I decide whether I'm going to bid on that property or not. And if I am, I put it in my keep file. And then I will either go physically look at the property if I'm able to do that. I don't always do that for liens, but if I'm doing a deed sale, I'm going to physically look at that property or have somebody look at that for me. That's the next step for deeds. And if it's land, I'm definitely going to look at it because there's things that you can't tell from a map. So if it's a deed sale and it's land, I'm definitely going to physically look at it. You can't tell the grade of the property. And where I live in Pennsylvania. I live in the Pocono Mountains. So, some of this is kind of mountainous and you can't always tell. And even if it's not like on the side of a mountain or the side of a cliff, you can't tell the grade of the property. And the thing is, where I live, there's no sewer system. It's rural. So your property has to pass a perk test. And if it's too rocky, it might not pass. If it's too wet, it might not pass. And even if it could pass a perk test, if it's on too much of a grade, they can't put a regular septic system in. You have to have a special system, and it can cost a lot of money. And builders are not going to want that. Somebody's not going to want land that they have to pay extra money to build on because they're going to have to fill it in first or put a special septic system in. Septic systems are, expensive enough to put in. So, all right, so that would be the next thing that I would do. And then there are other things that you want to do for deeds in particular. You want to search the title of the property. Now, you're not going to pay for a title search, all right? But you can search the public records under the owner's name and find out what other liens are on that property, okay? And the reason you want to do that, first of all, you want to find out if any liens do survive, and you would find that out from the county before you even go to that deed sale. And then you want to make sure that whoever does have a lien or judgment on that property has been notified that that is going into the sale. Because what could happen after a tax sale is, let's say there was a mortgage holder on the property, and they can come back and say, well, you should have never sold that property in the tax sale because we're the mortgage holder and you did not notify us. So we're going to take that property, we're going to buy that property back. Now, they would have to go to court and prove it, all right? But that could happen, and then you're not going to lose your money, you're going to get your money back, but you did all that work for nothing. So that's why, now here's what I do in Pennsylvania. I would go to the Tax Claim Bureau. They are the ones who do the sales in Pennsylvania. So whatever tax sale you're going to go to that, whoever does the sale, and say, how do I check for notification of the tax sale? So you're going to check to make sure that everybody was notified. So what I do is I get the file. They'll actually give me the file, and I will look. So I, physically do this. I will look for the little green card that's signed. They have to send it certified mail return receipt. So that green card, that's the receipt, is signed by somebody that received the notification. I look for that, or if they can't get that, they will sometimes have it delivered, it personally delivered by somebody in the sheriff's office, right? And like when you get a subpoena, it's personally delivered, and then there is something signed by whoever delivered it that it was personally delivered. So I just look for proof that whoever was supposed to get notified, the owners and any other lien holders were notified. All right, so that's some extra extra due diligence that I do in evaluating tax sale properties. Now, if you'd like to see who would like some more education on this, I'm doing a master class next Thursday night on evaluating tax sale properties. It's our tax sale success master class, and it is $47 to come to the class. Now, coaching client, you get this. Members, James, you're a member, you get this, you don't have to pay for it, but for everybody else, it's only $47, okay? So, and you go to, I will put the link in here for you right now. Go to taxlienlady.com, tax sale success masterclass to enroll in the masterclass, and you'll get the recording, you'll get lifetime access to the recording. And right now, if you go there to that page, scroll down to the bottom of that page, and I have a checklist for tax deeds that goes through the main things that you have to do for to do due diligence for tax deed sales, for tax deed properties. All right, has this been helpful for you today? If it has, share it on your Facebook page so that other people can benefit from this free training. And let me know if I hope to see you next Thursday. It will, by the way, you have to register before the class, because we won't let people register once we start the class. Registration is going to be closed. So it will be closed sometimes Thursday. Okay, you're welcome, James. And Ray, I will give you a call later today and we'll get that sorted out, okay? All right. All right, everybody, thanks for being here. I'll see you Monday morning at 9:30 a.m. Eastern, 6:30 a.m. Pacific. Bye.